It's an honor to be addressing this distinguished group attending the Alliance for Financial Inclusion's Global Policy Forum. It's a special pleasure for me since you're in Egypt, the country in which I was born, and you're discussing a topic that's been a constant theme in my own career, having worked on microfinance as chair of the consultative group to assist the poor and at the Department for International Development, the IMF, and more recently, having been a central banker and regulator at the Bank of England. I would have loved to have been there in person, but I hope this message is a way to be with you in spirit. I wanted to say a few words as someone who has sat on both sides, trying to promote financial inclusion and innovation as a development professional and trying to ensure financial stability as a central banker and regulator. I often felt that being a central banker is a tough gig. You work so hard to have nothing happen, for prices and financial institutions to be stable. It's hard to get credit from the public for making sure that bad things don't happen. Of course, the financial crisis in 2008 showed us the devastation caused by neglecting risks building up in the financial system. Regulators have learned a great deal since then, but they've also learned that promoting financial inclusion is a powerful way to not just prevent bad things from happening, but to do much good in the world, and that this can be achieved without compromising on the financial stability that we all hold dear. That's why I wanted to applaud the Central Bank of Egypt for the excellent work it's done in this area, as well as the other central bankers and regulators in the Alliance who've embraced this agenda and have worked hard to set rules, provide enabling infrastructure, and used a variety of tools of public policy to enable greater inclusion. You're coming together at what I think is a pivotal moment for financial inclusion. We all know that 2 billion adults lack access to formal financial services. But we also know that there's been huge innovations that challenge that state of affairs. The microcredit revolution showed the world a lending technology that could deliver credit to very poor people in a commercially sustainable fashion while transforming their lives. It also demonstrated that women are excellent credit and that giving them access to financial services had wider benefits for their families and communities. That paved the way for broadening services into savings, payments, insurance, and risk management tools. And more recently, the digital revolution has reduced the costs of financial services exponentially. Today, over 400 million people use digital financial services, but the potential is much, much greater. So why do I say this is a pivotal moment? Because all of the ingredients for a dramatic increase in financial inclusion are there. Political commitment to inclusion has never been greater with the signing of the Maya Declaration, the G20's Global Partnership, the UN's commitment to the agenda, and the very important work of the Alliance. Mainstream commercial banks have realized the potential and are partnering with microfinance institutions and fintechs to reach the bottom of the pyramid. Many of the best intermediaries are going global and expanding their activities across many countries. And every day, one hears of new innovations in areas such as APIs, mobile payments, credit bureaus, data analytics, and risk mitigation that have the potential to transform access. That's why events like the Global Policy Forum are so important. They provide an opportunity for leaders in this field to come together to share their knowledge, sift through the evidence, and spread great ideas around the world. So I wish you a very productive time in Sharm el-Sheikh, and I hope you'll be looking back in a few years and say that your meeting in Sharm el-Sheikh was the pivotal moment when there was a step change in access to financial inclusion for the world's poor.